Nasdaq's up more than 10% since that Powell presser, right? On the belief that if the Fed was closer to the end, you wouldn't have a exorbitant rise in interest rates, and thus tech stocks would do better than others. Now that seems to be called into question, no?
Well, I think you've had such a big rally in tech, and especially in those higher beta tech names. And so as the 10-year is getting closer to 3, that's where you're going to start to see the unwind start is in those higher beta tech names. But I mean, as a juxtaposition, Apple is so strong and continues to be so strong. You know, when you were gone, you know, we sold our Qs position and actually went into a more defensive Qs, which sells out of the money calls on the Qs, because I still do think over the last 10 years, the Nasdaq's done close to 15% per year for the last 10 years. It is over-earned. I think there's going to be more disparity between the underlying names, and I still think there's going to be volatility there. And so we wanted to sell calls against that and not just have that direct brunt exposure after this nice rally that we saw over the last month.
Okay. So take the ball from there, Weiss. Nice to see you, by the way.
Sure.
I don't know if you were able to hear everybody's commentary because your feed was down.
I did.
So what do you make of it?
Yeah, I did hear it all, and I was very entertained. Look, I agree with some of it, and some of it I disagree with, and you could probably guess where that is. The bulls seem to want to have it both ways. They want to say, hey, the consumer's stronger than ever, the economy is really strong, don't worry about one of the two pillars of the economy, which, as you point out, housing selling off, yet inflation's going to come down, the Fed's going to stop. Think of the contradiction in that thought process. So the easiest way to analyze the market and see what happened is look no further than the 10-year. As the 10-year yield started to rally,
back at 3%,
and 10-year started to sell off, right, then you've seen the market come down over the last few days, and that's going to be the case. Look, Powell knows he made a mistake at this point. The whole world knows he made a mistake with saying inflation is transitory. I also bought into that early on. So they're not going to make the same mistake here and say inflation is transitory. Let's just get it to 5% and then we'll take our foot off the gas. That's not going to happen. They would rather overshoot because longer term inflation is more destructive to the economy going forward than it is a benefit. Now, in terms of autos,
let me ask you just point blank.
Okay,
do you think that this big summer rally is over? Is that what the last week started to tell us?
Right. So I don't know if it's over today, but I've been consistent in saying that in September it ends. In October, it's definitely over and not coming back because that's when Fed actions, the one they've done to date, start to take effect because it takes a while for rising rates to filter through the economy. And don't forget, with the lack of issuance in treasuries, you've had unreasonably loose conditions in contravention to what the Fed was trying to do. So you can see that reverse. And then, of course, they really start paring back the balance sheet. So you've seen the market rise, as Bryn points out, from short covering number one, from liquid conditions in the markets overall in the economy, and FOMO. And those are all reversing. I don't think we go below the lows that we've seen, but I do think that we can kiss those lows and perhaps stay down there because things just aren't that great. And you're seeing pressure from earnings. And you're also seeing more analyst downgrades. They're getting it. They're close to the situation. I'm not saying they're perfect, but that's how I think it plays out. So you can party on until the end of the month, but that's getting kind of cute, which is why I took some.
Some are wondering whether you can.